Morning, guys. Friday the 12th. Man, this week had a lot happening that we didn't get to talk about because I only do this twice a week. But Wednesday, so Tuesday, things were looking, fairly decent, right? Go back and look at that. We're talking about where things are topping out at. There's a lot of risk in that. Not if it couldn't break through that level and continue as far as the bonds were concerned to improve, then we risk some downside. And wouldn't you know, Wednesday was the CPI report. So that always has risks, going into a big news day like that. And Wednesday, we got the inflation report saying that inflation was like 0.9% hotter month over month, at least from the last time they gauged it, right? So 0.9%, that's 1% per month. If it maintained that kind of pace, look at where inflation is going. It's basically what we've been claiming inflation was all along. And then you've got the Fed, this is what they're willing to admit to, right? So if you're at 0.9 every month for 12 months, where does that put us? That's 10.8% inflation every year. That's insanity from the perspective of what they're saying, right? So again, we know the metrics that they use and the index that they use to compile their numbers take out a lot of the things that you and I spend money on every day to live our lives. You add those things back in, the things that we spend money in to actually live our lives, we know that our inflation numbers from what we're getting from John Williams Shadow Stats is closer to 14%. Now, if they're willing to say that, that tells us that our CPI is sitting somewhere around about 6.2%, right? So everything's going up in cost. Everything is exploding in expense. So why would interest rates not do the same? That's the big question I got to ask everybody. Too often people are like, well, should we wait and see if the rates go down? Like, nothing's going down. There's nothing declining right now. So that being the case, it's amazing to me we're sitting where we are. I cannot believe that we have the rates that we have today and the extreme inflation that we're experiencing. Let's take a look at what happened when those numbers came out from the Fed, right? So this is where we were on Tuesday, back up in here, right? So we're hitting this top. That was a risky top we were bouncing off of. As you can see, we'd hit this thing a few times and come off of it. Now we had the numbers come out, bam. Everything opened up and hit hard down at the bottom. Now, this seems to be a bit of support when I'm looking at various different, 1, 2, 3, several different times we had hit this and bounced off of it and climbed back up. So this is thought to be another support line. Now, if we continue to trend down from here, we'd be coming back down to this support line. But as it looks like today, shaking off a little bit of this news, shaking off some of this negative data with respect to the CPI and the report that comes out with inflation. And look, now we're back above this. Now we could be trading within this, working our way back here. This is an upward trend line that we have hit or we've created here. So this upward trend line, we could be getting back up into this upward, at least the upward momentum. There's a lot of technical stuff when you're talking about this, and you're talking about where people place their purchase orders, and they place their sell orders and all that kind of thing in the bond market. It has a lot to do with numbers and a lot to do with what they see trends happening. And so in this, when you're looking at that, it's kind of hard to really explain. We get into the Fibonacci levels and all kind of stuff. It's a lot of detail to get into right here. But ultimately, I'm looking at this and I feel good about what's going forward and thinking that we're going to get some more positive return. But man, when we're talking about cost of everything going up the way it is, gas, food, lumber, everything going up the way that it is, I'm just not convinced that we're going to be able to maintain this for very long. But so far, they're doing whatever they can to keep the rates low, take advantage of it. Since it's way lower than the rate of inflation, I don't care what rate you get, you are winning. So if you're going to spend your time shopping around, guess what you're going to do? You're going to miss out on this opportunity. You're going to be too busy looking around for the cheapest deal and miss out on the deal of a lifetime, because that's where we're at. The deal of a lifetime, getting the cost of your money way less than what you're paying them back. If you have any questions about that, go back and look at some of the other videos we've got. Go to my website, check out some of the videos there, or set up a time to talk to me. We'll talk about this in greater detail, how putting more money down to try and get a lower interest rate is a complete waste of that money. Aaron Chapman's opinion. I'll explain to you why, and you decide for yourself. Shopping around, trying to find the best interest rate in an environment like today, again, a waste of time, energy, and money, missing opportunity. If you need direction on this, let's set up a time to talk. Let's get into the weeds in this one, and then you can make an informed decision for yourself, not just go around based on speculation and theory. Appreciate you guys. Hit the subscribe button. Check us out in Tuesday.